Hello ladies and gentlemen, I'm Joseph Novichko, Senior Trading Manager with GDM. Today's outlook, we're starting with China's Shanghai Composite Index. It closed up 5.4% to reclaim the critical 3,000 mark, tracking of course the upbeat sentiment across the region, underpinned by Wall Street's biggest one-day gain since 2011 overnight. China shares finished in positive turf, with the benchmark Shanghai Index accelerating in its climb upwards to end at 3085.4. Nikkei 225 index rise 1.1% in equity markets in Japan were on pair with the benchmark rising on a broad-based rally, while of course the Topix index surged 1.5%. Meanwhile, the Bank of Japan's 2% inflation target can be achieved by next year despite the continued drop in global oil prices. Bank of Japan Governor Kuroda said during a speech in New York. The Japanese central bank expected to reach an inflation target of 2% during the April-September first half of next fiscal year, but many see the goal as a very tall order. The yen nursed losses against the dollar on Thursday as gains in Chinese equities helped underpin risk assets for now, and of course dampen demand for the safe haven Japanese currency. The dollar edged up 0.1% to 120.03 yen in the wake of its 0.9% gain on Wednesday. The dollar had set a 7-month low of 116.15 yen earlier in the week. Australia's S&P 200 index headed up with 1.3% on the back of a pickup in buying across the majority of sectors. European markets, if we're looking at the old continent, opened higher on Thursday following a sharp sell-off yesterday after U.S. stocks made a stunning rebound to post the biggest one-day gain since 2011. The Pan-European Stock 600 index was over 1.9% higher at the open. London's FTSE 100 was up 2.4%. Germany's DAX index was 2.7% higher, while of course the CAC 40 in France was at 2.4% gain. The bounce in U.S. stocks is attributed to New York Federal Reserve President William Dudley, who said an interest rate hike in September looked less compelling. Dudley is a voting member of the Federal Open Market Committee, as we all know. The euro rose 0.3% to 1.1353, still nursing heavy losses from Wednesday when it slid around 1.7% and of course pulled away from a 7-month high of 1.1715 versus the greenback, set early in the week. Gold in the commodity sector steadied on Thursday after suffering its biggest fall in 5 weeks in the period's prior session as stock markets recovered, but of course indications that the U.S. rate hike might happen later than expected gave a floor under prices, providing some support to gold were the comments of the New York Fed President William Dudley also on Thursday that the prospect of September rate hike looks less compelling, as we quote, given the threat posed to the U.S. economy by recent market turmoil. Gold was up 0.2% at 1127.35 an ounce in Asian trade, after dropping 1.3% on Wednesday, its steepest decline since July 20. U.S. crude, of course, in the energy sector is the last for today. Front-month contract rose to 191 cents to 39.51 a barrel after setting down 71 cents to 1.18%, 38.60 a barrel. U.S. crude inventories, as we see, fell 5.5 billion barrels in the week to August 21, the biggest one-day decline since early June. Data from the Energy Information Administration showed on Wednesday. That was in line with the industry group, the American Petroleum Institute's late Tuesday report. In the calendar today, a lot of major financial data, mainly from the U.S. At 12:30, personal consumption expenditures, initial and continuing jobless claims, and the second quarter gross domestic product. All of that with high volatility expectations. So stay tuned along with the calendar and advice to all traders and investors. Thank you for watching. See you next time. Bye-bye.